Hey there, I'm with Tina, our president and owner of Transworld, and we wanted to talk about working capital. So what is included in the sale of your business? And we're talking about working capital in transactions that are over $1 million.
That's right, transactions that over $1 million, buyers are purchasing a fully functioning operating company, not just equipment or goodwill. The goal is to transfer a business that can continue operating smoothly on day one under the new ownership.
Absolutely, and we definitely recognize working capital can be one of the more confusing parts of a transaction, so that's why we wanted to just clearly explain why it matters and how it's going to impact your transition.
Yeah, buyers are receiving, when they purchase a business, tangible assets like equipment, machinery, furniture, fixtures, vehicles in the business, tools and technology, leasehold improvements, and if it's applicable, inventory.
That's right. And they're also going to receive intangible assets. So things like brand and goodwill, customer relationships, contracts if those are assignable, vendor relationships, hopefully trained employees in your systems and your processes.
And not only are they obtaining these assets, they're also going to be asking for working capital. Working capital represents the operating fuel of the business. It ensures payroll, vendor payments, and day-to-day expenses are being met without requiring the buyer to immediately inject additional cash.
Yep.
Working capital is actually a formula, and the formula is current assets minus current liabilities.
Exactly. And so in practical terms, this is going to include accounts receivables plus inventory plus prepaids minus accounts payable and your accrued expenses. Your cash and your long-term debt are generally excluded.
That's right. And you may be asking, is working capital required when I sell my business? I wouldn't use the word required because we know in business acquisitions everything is negotiable.
Absolutely.
Right? I would say it is expected by more savvy buyers that we are working with today that are buying businesses in this price range. They are going to be expecting some working capital. The agreed purchase price reflects the earning powers and future cash flow of the business. Working capital ensures that the operational engine supporting those earnings remain intact at closing.
Absolutely.
And also lenders require working capital to ensure the business has sufficient liquidity at closing to operate normally and generate the cash flow needed to service the loan.
Absolutely. And remember that without working capital, the buyer is going to need to immediately contribute funds to stabilize the operations. So establishing a normal historical working capital level protects both parties, and it's going to support a very successful transition.
Just remember, if you have a business that falls in this price range over $1 million in value, you are selling a functioning financial engine, not just assets. Working capital is typically expected and ensures the engine continues running seamlessly on day one.
And that's what we want for you.